Good afternoon. I have fond memories of this stage. The last time I was up here, several years ago for a NASBA annual meeting just like this, I entered my family into the Center for the Public Trust talent show. I made my then 5-year-old son and my 7-year-old daughter, as well as my husband, dress up in pirate costumes, and we paraded around this very stage chanting the words to a limerick I had written regarding CPA mobility. Yes, we were the pirates for mobility. It was a success. We took second place, won $200, and I like to think that in some small way, we really contributed to the successful adoption of mobility across the United States. But we're not here today to talk about mobility, but another important issue, standard setting. Gayland has already given a brief introduction to these three fine gentlemen, and there are, of course, more detailed bios in your notebooks. And I am very pleased to present these three individuals who I hold in high esteem. Please join me in welcoming them today to the stage. Our panel this afternoon will work as follows. First, our panel members will briefly explain their role and the perspective that they bring to standard setting. Next, I have a few planned questions which I will ask each panel member to address. After that, we will open up the microphones in the center of the aisle, and we'll have about a half an hour, maybe a bit longer, to take questions from the floor. So let's get started. Go ahead, Billy, if you'd like to start, and please spend just a few moments describing your role on the PCC.
Can you hear me? Thank you, Laurie. And I remember the skit very well. It was good. And our board voted for mobility because of that, only because of that. A lot's been said already today about my role on the PCC. I don't really think I need to go back through it with you. It would be to recite my life story, and I don't want to do that. It's an interesting role working with the FASB. The interaction has been very positive. The group has melded together quite well. As you know, our responsibility as a council is to determine whether and if there are exceptions or modifications that need to be made to accounting standards to accommodate the needs of private company stakeholders, particularly the users, due to relevance issues as well as excess cost or things like that have caused a lot of the angst over many years, which have resulted in all of this attention. I will tell you that the unsung heroes in this process, number one, are the FAF, Financial Accounting Foundation, for recognizing the issue many years ago and initiating a process to get us to where we are today. And I think on the cusp of beginning to have some solutions, at least initially, in this process. Secondly, the FASB have really changed their dynamic viewpoint of the private company issues, not just in dealing with the PCC, but likewise in dealing with these issues head-on in their own deliberations, as many of you who may read their literature or read the activities of the FASB will quickly recognize. I think the long-term solution to this issue is not necessarily a lot of new changes from look-backs or from perspective, but a process that the FASB would have in dealing with these matters prospectively. The FRF issue, which we'll talk a little bit about as well, is attached to the dynamic, clearly, because there's outcroppings of concerns along many lines up and down the issue, up and down the lineage of large companies, small companies in the private domain. And I know we'll talk about that. But I want you to understand that my viewpoint is that historically as a practitioner, currently as a preparer on the board of a private candy company, and then certainly from just the responsibility standpoint that the Texas Board of Accountancy, NASBA, and the Texas Society asked me to do, which is to try to represent those issues and the attitude and the inertia and the dynamic that they believe needs there. So I'm really a pusher, not a doer. The smart people are the council members, including Diane Rubin and the other 8 people. I rely heavily on them and their brilliance on the tough issues. My initiative is just to keep it pushing down the line. Is that enough? And I didn't wear a tie because Louise told me I didn't have to. If I violated your trust, you misspoke or I misunderstood. Sorry, go ahead.
My name is Chuck Landis. It's my honor and privilege to work with the AICPA standard setting bodies, the Auditing Standards Board, and also the Accounting and Review Services Committee. The Auditing Standards Board, I suspect most of you are aware, sets generally accepted auditing standards which apply to audits of those entities not covered by the PCAOB. You should also know, if you don't already, that you have 5 very distinguished NASBA members who sit on the Auditing Standards Board, and they do an outstanding job and add tremendously to the debate around the table. The Accounting and Review Services Committee is charged with setting review and compilation standards. And again, it is another very, very hard-working body. And there, too, you have a representative sitting at the table. And it has just been, I personally believe, a fabulous partnership between our standard-setting bodies as well as NASBA. What I also want to mention is that the Auditing Standards Board sets more than just auditing standards. They also set attestation standards, and I know one of the big issues that you all will be discussing is the definition of a test. And we have certainly seen a proliferation in the last few years of more and more engagements falling under the attestation standards. And so that's a very important responsibility that the ASB plays. The ASB also sets quality control standards. And that's an area, too, where I'm very proud of the work that we have done and the thought leadership that the AICPA, again, working in partnership with NASBA, that we've been able to set some very high-quality standards. Jim, in just a moment, will speak about the international standards, but I think it's important to recognize that some years ago, the AICPA, ASB, as well as ours, took the position that we wanted to base our standards on the international standards. We feel very strongly that convergence and harmonization is a good thing, and I'll speak more to that a little bit later. Finally, my role at the AICPA as the technical vice president of accounting and auditing is to be involved with all of our technical guidance from our 27, 28 industry guides down to our audit risk guidance that we put out each year, as well as any of our non-standard guidance, which might entail special purpose frameworks and et cetera. Then the last thing that I wanted to mention, just for the record, is that my role in standard setting also reaches out beyond just the AICPA, but also to the Committee of Sponsoring Organizations, or COSO. AICPA is one of 5 members of COSO, and again, it's my privilege and honor to be the AICPA's representative to COSO. And again, we set internal control criteria. So that's my role in the standard setting process.
Good afternoon, everyone. I'm Jim Silf. When Louise Haberman invited me last year to come to your conference in Orlando, not only was I pleased to come and talk about the public sector debt and the role that accountants around the world should be playing in that, but I also mentally said, darn, I know where next year's Congress is. That means I'm not going to get there. And in fact, I wouldn't be here except that a woman who I think is well known to many of you, my deputy chairman, Olivia Kirtley from Kentucky, who is a full-time corporate director, was asked to come and speak, but then also was asked to attend some AICPA meetings last week on the West Coast, and she just couldn't be away for 2 weeks. So she said to me, Jim, you have to go to Maui. So Jeanette, my problem wasn't your problem at all. I was very lucky. I'm going to say something to a microphone that I have never said in my life. I am a CPA. You think that sounds strange? Well, stay around for tomorrow's session to hear and understand how the Canadian profession has moved from the designation CA to CPA. And I personally am delighted because when I go global and I say I'm a CA, everybody says, "What's that?" So I say, when I'm coming through the US immigration, I always tell them I've lied for years, I'm very sorry. I've always told them I'm a CPA, and then they never ask me any question about what I'm doing coming into the United States. So, but now I can genuinely say I'm a CPA. I've been involved in standard setting since the late 1980s, first as a volunteer in the Canadian environment, setting auditing standards and a member of the Auditing Standards Board, and through that as a volunteer in the international environment. And from 1999, as a full-time staff member of the International Federation of Accountants, where I'm responsible for the teams that work on 4 standard setting boards: audit, ethics, education, and public sector accounting. And the life was going on pretty well. We knew what we were doing. We were doing it with the best intent in the world and producing good standards way back from 1977 when all this exercise started, right up until the time that I started. But the world changed around about 1999 when a few collapses occurred, a few accounting firms were brought into question, and the debate about whether and how the profession could be involved in setting standards became front and center in the minds of global leaders around the world. And so the question that I have been wrestling with quite significant amounts of my time for the last 10 years is, what's a reasonable form of oversight that would allow the professionals who understand the issues, whether they are audit or ethics or education or public sector accounting, to be involved in the process of setting those standards while finding a way that allows the recipients and users of those standards to feel comfortable that they truly were set in the public interest. I've also, over the last 3 years, chaired the Institute of Internal Auditors International Oversight Committee, which they created 3 years ago to think about how could they elevate the credibility of the Institute of Internal Auditors auditing framework that is used around the world, including throughout the United States, exceeding numbers of members of the Institute of Internal Auditors. So I've had experience of 2 models, but my main role here today, I think, is to tell you a little bit about the model that IFAC has developed and modified and changed and massaged and will change again since 2002. Thank you.
Well, it is certainly apparent that, especially for auditors like me, we could devote a whole conference to learning how to navigate the rules and all the standards that we have and that we are getting in the future. But instead, we're going to take the next hour and really focus and talk about how this impacts each of you and me as a regulator, and that's our focus today. So I'll start with the question addressed to Billy, first off. There's been a lot of discussion this year about the use of special purpose frameworks and standards. What are the implications of this, in your opinion, to CPAs and to state boards of accountancy from a public protection and an enforcement standpoint?
Well, we've talked a lot about it already today. Obviously, Galen did his comments, Bill Bellhoff did, as well as Russ Golden. And I don't want to repeat or add emphasis to any of those in particular, except to say that we have it, we need to deal with it, and we need to get on down the road. We need to keep in mind as state board members that the FRF for SMEs has a real intent. The intent is to serve the need of users of private company financial statements, generally in the smaller or so-called Main Street segment of our economy. It's needed. It's born out of the concerns of private company accounting standards, and maybe even an additional element of simplicity that may be needed to understand financials, with cash flow being a primary driver. Indeed, I believe that even the PCC may want to take up the subject of cash flow financial statements and their use to users of private company because of that issue. Likewise, I think there are many issues within the FRF for SMEs that could indeed be a checklist for us to consider within the breadth of standard setting. Perhaps the day is coming that the FRF for SMEs may not be needed, nor would the PCC. The answer, obviously, would be that the culture had changed to where the real breadth of our economy, which is private companies, is first and foremost in the minds of standard setters. That's, I think, the overriding goal. We don't need more stuff. We need less stuff with more focus. And so I look at the FRF for SMEs with all of the concerns that a regulator would have, but also from a standpoint of the dynamic that's creating the need. And I think we do balance that as we look at the issue. The concerns that NASBA and others advanced relative to authoritative versus non-authoritative are certainly very real, and we as state board members need to recognize that when we deal with the legislature, the governor's office and the legislature, and there's a problem that arises, we've got to answer the question, why did we accept as authoritative standards that are set by the very trade association or trade profession that we regulate? Now, to us as professionals within the AICPA and state societies, that's a little bit sharp, a little bit critical. But to us who have served on state boards, and indeed to my brothers and sisters in the AICPA who could or and will serve on state boards of accountancy, it's a real issue of credibility as a regulator as to what you accept and what you don't accept on behalf of your neighbors, the people that elect the legislature and the governor and effectively appoint you and agree with it. So it's a big responsibility. We need to balance as with the need of the profession, the needs of the preparers, and particularly the needs of users balanced against the expectations of the public. I think that's been said many times. I believe that the mutual agreement that the AICPA and NASBA have put together should be enough. I think we need to get on down the road. The PCC and the FASB needs to do their job. We need to support the active input from the AICPA, many of its members, committees, including TIC, which we're now working a lot with, as well as state boards and state societies and their various communities within those organizations to work towards the same goal, which is to simplify the standard process for GAAP, as well as affect a meaningful utilization of financial statements for users on a very local level. That's kind of what I think.
That's clear.
Do other panel members have anything to add before we go to the next question?
No, not yet.
Lori, if I may, I second everything that Billy said. I don't have anything that I would disagree with. And what I wanted to add to what Billy said is that I believe that's why it's so important to have the Auditing Standards Board and the Accounting and Review Services Committee, the two bodies who are charged with setting the verification reporting standards on these various types of accounting criteria, to have those bodies be recognized as working in the public's interest. That is terribly important to me. I know it's terribly important to everybody at the AICPA that those bodies not be viewed as self-serving, but that they be viewed as professional bodies working to protect the public. And I truly believe, and of course I will quickly admit I'm biased because that's who I work with, but I think any of you sitting in the audience who either today or previously have served on the Auditing Standards Board or ours would confirm what a hard-working group it is that truly does work to protect the public's interest. And certainly from an AICPA's point of view, what Billy said is absolutely true. We do have to balance user expectations, users' need, along with a strong public protection. And to me, that comes from the reporting standards and what is the CPA saying about certain types of presentations.
Billy, I'm going to put you on the spot a little bit and drill down on that last question just a little bit more. We have a lot of sitting board members here in this room, and I think that they would be interested in hearing your thoughts on what level should they be deliberating this in their board meetings. Is this something that should be brought up, for example, in the Uniform Accountancy Act as model rules? If not, again, I'll repeat my question, at what level should they have discourse in their board meetings concerning special purpose frameworks or non-authoritative frameworks?
Well, you use the word non-authoritative. And I think Russ Golding used the word trust. When it comes to the attest function, particularly audits, audits of financial statement should be in support of financials prepared in accordance with GAAP. The state boards make that determination, and they make that determination, as I said earlier, on behalf of the people of their state. So I think you have to determine what basis makes sense and what authoritative means. And I'll digress just a minute with that answer. We take, at the FASB, it take too long to deliberate standards, right? We started some of our discussions last December. We're just now getting the standards out. They will be effective 2013, but at the last minute. Why does it take so long? Well, authoritative means you go through a very good public vetting process, you collect input, you process, you give respect to that input, and then you make changes and you go through another deliberative process before you give birth to a standard. The non-authoritative process may not do so. It may follow a shortcut or some other method in coming to answers that's expeditious, but not necessarily through this authoritative process. And I'm not saying that to indict, if you will, FRF or SMEs, but that's just how we have to think through this and or other basis as we move forward. So Atkinson Candy Company uses income tax basis of accounting. We don't have a lender. We only have me and the other shareholders, and we read the financials and we ask all the questions. But when we talk to a lender or someone about our financials and they say, well, we need to have an audit, I'll say, we'll give you our tax return. Well, why? Well, it's authoritative, it's set out by regulation, it's been publicly vetted, blah, blah, blah. And they say, well, okay. So some of the use of financial statements in today's marketplace where you have GAAP forced on you may be just a result of poor negotiations. But back to your point, I think that we have to be very careful when we look at the users. To the extent users are accepting to financial statements, we as state boards, we as the public should recognize that and in some way give respect to it. And there are reporting mechanisms through the AICPA's committees that do that. But I just believe that as we process these discussions at the state boards, we need to be mindful of our responsibility. And yes, indeed, we should use some of the resources we have through NASBA, through the collective issue, and arriving at maybe a good policy. Should we have this in the UAA? Possibly, if it is a recurring or a continuing issue, possibly so. And I would say that any state board whose act is going through sunset might want to visit what the bases of accounting should be for auditors or CPAs who are reporting on financial statements. But we have a number of issues like that, including the other attestation standards, compilations, and the like that we're dealing with as well. And my concern about auditors and the responsibilities in reporting is that the CPA has been given the responsibility by the various legislatures to be the authority and the trusted, reliable authority on financial statements and financial statements presentation and the attest function. To the extent we, as regulators and or as a profession, begin to open up that tent and let other people in, we are losing, and the public is losing, valuable confidence. And it starts with compilations. It ends also with the basis of accounting. We've got to be mindful of that responsibility and seek to take the higher road whenever the choice is ours. I don't know if that answered your question, but that's how I feel.
Thank you, Billy. All right, this next question goes to Chuck. As you noted just a few moments ago, there is a proliferation of bodies that claim a standard-setting role in the United States, and there are new groups emerging. What is your vision or prediction for the future as to these standards and the standard setters? Will they converge? Will they integrate? Also, how will the users and the regulators be able to effectively sort through the wide array of choices?
It's an excellent question and an excellent topic, and I know we don't have all day to answer that. So let me try to boil this down as simple as I can. And by the way, I need to interject one other thing from my opening remarks. And Jim was probably sitting there thinking, well, now why isn't Landis mentioning that he is on the International Audit and Assurance Standards Board? And I'm a new member on IAASB, and I forgot to mention it. So Jim, I apologize. So I did want to come back and just make sure that everybody understood my role there as well. If we look at standard setting, I think it's important that we look at kind of two big buckets here. And one bucket is what I'll call the verification process that CPAs are involved with, and we have that monopoly. We are the ones who go out and verify information, and we report on that information, and we use certain standards to do that. And I think it's important to differentiate that bucket from another big bucket, which is the prepares bucket. What are the measurement, presentation, and disclosure standards that the preparer either has to use or wants to use? And oftentimes it's confusing to folks, and they tend to mix those two buckets. I was on a recent telephone call with folks from RMA. You may have picked up Russ's comment that RMA wasn't particularly fond of our FRF, and so we thought, well, let's talk to him about why is that. And so we have a group of pretty sophisticated bankers that we're talking to. And one of the first questions that was posed is, well, we don't think that we need another framework. We have audits, reviews, and compilations. And I said, excuse me, I just have to interject here. We're not talking about a verification standard. We're not talking about an audit, review, or a compilation. We're talking about an accounting standard, a preparation standard. Oh, well, and then from there, the conversation turned very positive to where we actually now have gotten an invitation to go to their conferences and talk more to the risk management banker organization about this special purpose framework. And so I want to just be clear, especially for the non-accountants in the room, that there are these two buckets, and we need to, I believe, keep those two buckets separated. So to Lori's question, let's think about the bucket around verification. If I'm a CPA in the United States, there are essentially 5 standard setters that I'm going to be involved with. The AICPA has 2, as I mentioned, the Auditing Standards Board, the Accounting and Review Services Committee. We have the GAO that sets governmental auditing standards. We have the PCAOB that sets auditing standards for issuers and broker-dealers. And then we have the IAASB that sets auditing standards for audits of international entities. So we essentially have 5 verification reporting bodies right now. And I will tell you, thanks to when Jeanette was at the GAO, and thanks to many in this room, but we intentionally have worked very hard over the last 5 or 6 years to converge generally accepted auditing standards with GAO auditing standards and the international standards on auditing, where if you look at those 3 bodies, there are very few differences. In fact, between our auditing standards in the US and the international auditing standards, I'd say there's really only one major difference, and I don't want to get too technical here, but it's in what's referred to as a group audit situation, where GIMS standards do not allow for a division of responsibility. But here the US standard setters, PCAOB, GAO, ASB, got in a room and we said, okay, what do we want to do in the US? And everybody was happy with that division of responsibility, as we have had in our environment for years. And so we kept that ability in our group auditing standard. Also working very closely with the GAO, we have essentially removed, not all the reporting differences, but we have essentially, in my opinion, removed all of the performance audit differences that we used to have between GAS and GAS governmental auditing standards. Now, we still have the PCAOB, and again, they have chosen a different path. I'm not saying that's right or wrong. They had a lot of political reasons when they started to go down a path unlike what GAO had done, which was to start with generally accepted auditing standards and then add the Yellow Book, which built upon that. And heavens knows David Walker, as Jeanette will recall from some of our early meetings, worked very, very hard in trying to convince the PCAOB that they ought to at least think about a similar model where they would take the auditing standards and then add to them to the extent that they believed. But I think the important thing for everybody to recognize, at least from the verification standards, we are essentially converged. And I think that's a wonderful thing. And whether you're from a Big Four firm, a mid-sized firm, or you're a sole practitioner, I think it's important to understand that if you get a phone call and you're asked to perform an audit in accordance with the international standards, you essentially are doing that today under generally accepted auditing standards. So we have that convergence in the verification bucket. Over here in what I'll call the preparation bucket, maybe not so much. Now, I personally was thrilled to hear Russ's comments this morning about how hard the FASB is working to converge with the IASB. But if you think about the accounting side, and we'll get to the non-accounting in just a moment as well. But in the United States, depending on how you would count the PCC work, you either have 5 or 6 different gaps. So you have FASB gap, and I'm including FASB PCC as one, and again, maybe some point that will actually break off and kind of be its own gap, but you have FASB gap. You have GASB, the Governmental Accounting Standards Board. You have the Federal Accounting Standards Advisory Board that sets U.S. GAAP for federal agencies. So there you have 3 GAAP standard setters. And the AICPA's Code of Professional Conduct through Rule 202 also recognizes the International Accounting Standards Board, so we recognize IFRS as well as IFRS SME. So you have 5 different accounting gap criteria that are out there that as a practitioner you have to understand when are each of those applicable? When do I use GASB versus FASB if I'm a hospital or certain types of nonprofits? So it is very complicated, and I don't see that changing. I do see, and I think it would be wonderful to see more harmonization and convergence between FASB and the IASB in terms of where that all might eventually shake out. So that's in the gap space. Now, we also have everything else, all the other accounting criteria. Now, let me give you some information that may or may not surprise you. But that other space is referred to as special purpose frameworks. You've heard that term talked about a lot. We used to call it OCBOA, or other comprehensive bases of accounting. Now we've converged with the international folks who refer to it as special purpose frameworks, and so we have all of those different frameworks. On the reporting side, we essentially classify special purpose frameworks into 5 different buckets: cash, tax, regulatory, contractual, and then anything else with substantial support. But that's for the reporting. That's for the auditor or the CPA who's reporting on that special purpose framework. Here's something that may or may not be new to you if you're thinking about doing something at the state boards relative to special purpose frameworks. Almost every state, if not every state, has an insurance commission that sets regulatory accounting for any domiciled insurance companies in their state. There are at least 20, if not more, states who either prescribe or permit regulatory accounting for their local, county, village communities. So between just regulatory accounting, we probably have over 70 to 75 different types of special purpose frameworks. Then we have cash, we have modified cash, we have income tax. Well, any of you who are used to the IRS code knows, well, you could prepare income tax on a cash method or accrual method. So you have 2 different kinds of tax methods. And we haven't even yet talked about FRFSME, or contractual accounting, where there are literally hundreds, in fact maybe thousands of contracts in the United States that prescribe certain types of presentations for accounting information. So we have this enormous universe of special purpose frameworks, but we've always had that. I've been out of practice now for about 12 years, but I was in public practice for over 25 years, from the largest of firms to a very small firm. And we worked with special purpose frameworks constantly, from contractual accounting to cash to tax, etc. And that was just one of the competencies that you learned about in dealing with certain kinds of clients. So if you are a state board and you're beginning to think about this whole notion of special purpose frameworks, you have to recognize that, one, it isn't new. It's been around forever and ever. And secondly, it might be a heck of a lot bigger universe than you might think. Now, Billy mentioned about processes. So let me tell you a little bit about how the reporting standards look at processes around special purpose frameworks. And again, I'm hoping I'm not confusing you all more. But we look at whether or not there is, one, a due process around the setting of a special purpose framework. And if it doesn't meet certain attributes, or if it does not go through certain due processes, then if a CPA was to report on that special purpose framework, then the report would have to be restricted to those that are familiar with that accounting criteria. And to me, that's where a lot of the safeguards are built into this process, that a CPA cannot just go out and report on any special purpose framework and issue that as a general use report, but rather must understand whether or not that report needs to be restricted because of the way that the reporting standards are set up. And I think it's a fairly high bar. Now, some of you might argue that FRF didn't go through a very high bar. But again, it might also surprise you that the process we use for FRF SME was the exact same process as COSO used for the 2013 framework that we just issued. What did we do? We hired an author. COSO hired PwC. FRF, we hired an individual to help us write that. We formed an advisory committee. COSO formed an advisory committee. The AICPA formed an advisory committee. We exposed the document for public comment. COSO exposed the 2013 framework. The AICPA exposed FRF SME. The boards, in this case, COSO board, because we don't have any employees, or in the case of the AICPA staff, working very closely with that advisory committee, went through each and every one of those comment letters, including NASBA's. And we analyzed whether or not a change should be made. And at the end of the day, a decision was made whether to accept the comment or not. And then the criteria was issued. Finally, and I know Lori probably wants to move on here with the questioning, but I think it's also important that you recognize that criteria, and this sort of gets into whether it's a standard, non-authoritative, or authoritative. And the cut that I make is whether there's anybody that requires the criteria to be used. As Billy said, his candy company uses tax bases. Nobody's telling Billy that he has to use the tax bases. He could use the cash bases. He could use any basis of accounting he wants. Or in fact, if he wanted to, his wife could create an Atkinson basis of accounting and use that. Now, can the CPA report on that? I think that's the major question. And what does the CPA have to say? Because that, to me, is where the public protection comes into play. It's what is the CPA's obligation, and how is the CPA required to report on all of these various special purpose frameworks that are out there. Finally, and I'll try to make this short, I believe it's extremely important, the work that you all are doing relative to the definition of a test. Because while there's accounting criteria out there, we are also dealing with a proliferation of standard setters. I'll call them standard setters. I don't really believe they are. A good case in point might be the Sustainability Accounting Standards Board. They call themselves a standard setter. There's no requirement to use whatever work product they come out with, unless the SEC or a regulator might require it. But we have criteria around internal control, COSO. We have criteria around privacy and security. We have all kinds of compliance criteria. All of those are preparation criteria. And now what we have to make certain is that the CPA is the one who's verifying and reporting on that, so that the public's interest is protected by having the CPA be the one involved with that reporting process, including reporting on all that non-financial information. So, in short, Laura, your question, do I see this proliferation abating? No, I don't. I think more than ever, you're going to see, especially in the non-financial world, all kinds of criteria coming out around a whole host of different subject matters. What will be important, in my personal view, is to make certain that the CPA is the one verifying and reporting on that. And to me, that's where the state boards ought to be most interested. In terms of convergence, from the verification side, we're essentially there, except with the PCAOB, as I mentioned, but they have their own reasons. But over on the accounting and criteria side, I think we're going to struggle for a long time, because special purpose frameworks are named that for a reason. They have a special purpose, and so there's no reason to converge all of those. So I hope that maybe is a long-winded answer, Lori, but also hopefully it provides some insight into why so much of this is gaining attention right now.
Thank you very much. Before we move to the next question, do the other two panel members have any additions? Yes, Jim?
Chuck, thank you for that. I ran out of fingers and toes counting how many sets of things. So here's my question, and here's my question to the state boards of accountancy. What do you examine your new graduates on? What do you have to know to be a CPA? Because I tell you what the world outside thinks the CPA means. This is a global world in which we live. It truly is. It's a global world. The adoption of international financial reporting standards and the adoption of international standards on auditing is growing extensively. And I think the challenge that you've got is to say, what is it that we expect our new graduates, the group that Karen is bringing through the academic programs now, to be competent in? And are we, or are you not, willing to ignore the other 8 or 9 sets of accounting standards or sets of auditing standards? And I have talked to a number of academics and faculty members, both in the United States and abroad, who are scratching their heads to say, should my next auditing textbook be on PCAOB auditing standards, AICPA private company auditing standards, or international standards on auditing, which are now used in 90 countries around the world, and we expect another 27 in Europe to adopt them next year? It's an interesting challenge. I totally understand. This United States is a huge country. You have a huge market. You have a huge internal market. But if you think about mobility of staff and mobility of giving people the choice of moving either into your jurisdiction or out of your jurisdiction, whether on a short-term or permanent basis, there's a challenge for you all, I would suggest.
Thank you. Okay, and Jim, the next question is for you. The IFAC standards boards have extensive oversight procedures. For example, they interface with a monitoring group and a public interest oversight board. Please educate our members on the roles these groups play and provide your insight as to whether these practices would help minimize the types of controversy we have with private company GAAP here in our own country.
This is a prepared question, and I have a prepared answer. You'll be pleased to hear, I think. Thank you for the question. If you have to have oversight, this is me speaking personally, if you have to have oversight, the easiest form of oversight to create is with a blank sheet of paper where you didn't have a standard setting board in the first place to now think about how you oversee it. When you have to build oversight on processes and procedures and systems that are already in place, it becomes complicated, it becomes unique, and whatever I now describe to you in the international forum won't work exactly the same in any form of United States scenario. I thought to myself, how do I explain this and keep you entertained? Well, maybe entertained is a bit too strong, but you've been listening to voices for the last 20 minutes, so I thought I would use a picture, because they tell me that a picture's worth 1,000 words. So if this works correctly, I should get some slides. Maybe they don't want me to have the slides.
The right process.
It's not the right process. Well, I was told I pressed this silver. There's 4 arrows on this thing. There we go. Oops, sorry. So now I have to go back one. That's easier said than done. Almost got it. Don't touch it up on the backs there. I'll do my pointy bit. No, I won't. Okay. So a picture's worth 1,000 words. Well, I drew the picture, and then I thought it's going to take 2,000 words to explain it. Because on the international scene, as you can see on the bottom and hopefully on the screens, you can see that we've got a number of standard-setting boards, which in 2002, the world at large said, if we are going to believe and accept that the focus, that the group of people around the table setting the standards is doing it in the public interest, and that was always the mandate under which the standard-setting boards operated, the simple answer is, frankly, we don't believe you. So the challenge was, even though you get assurances of the process that Chuck has just described for how PCC works, there's a gut feel out there, we don't believe you. And we had exactly the same model in the content of the international standards. So, a group of organizations called the Monitoring Group decided they would get together and think about how could you carry out a due process review of the work of the standard-setting boards. And they put together an interim group called the Public Interest Oversight Board, whose mandate is very clear and very simple. They do not get involved in the standard setting. Their job is to determine that once the due process by which the standards are set has been defined, that the board of the day, in fact, follows that due process. So, who is on the monitoring group and why were they interested? So the monitoring group, international financial institutions, regulatory bodies, all committed in their own way to advancing the public interest. Currently, the monitoring group is chaired by the chairman and chief executive of the Ontario Securities Commission, Howard Whetstone. So in a sense, he's very independent, but also a friend because he's lived and worked in the North American environment for some time, and he's understood how standard setting operates in the United States, and he's worked with the SEC. So he has a good understanding of this in the broader context. But he has to corral a group of people who have quite different, challenging views about what should be good standard setting, and whom are they representing when they debate that. You can see on this list that the challenges are that the organizations are global. Some of them are very industry specific. Some of them are very geographic specific. But all of them have a genuine interest in seeing that financial information, and many of these organizations, but not all, do exactly the same sort of activity as I am describing with respect to the International Accounting Standards Board in the UK and the International Financial Reporting Standards. Here was one of the fundamental challenges that we came up with is we have talked a lot today about public integrity and public interest. But can you define public interest? So far, none of these groups on the screen, nor IFAC, has been able to come up with a single sentence that describes public interest. So, for example, the International Organization of Securities Commissions, representing the SEC, the Ontario Securities Commission, and their equivalents around the world, say this is a very simple answer. Public interest is investor protection. So everything that we look at, when we look at it with our public interest lens on the question, we are thinking investor protection. Now, do we think about investor protection at all times, in all circumstances? I would say not. If you ask the European Commission, they have a broader definition or a broader understanding than just investors. Stakeholders. Stakeholders, not just investors. So then you get into the debate of, well, who are you trying to define these standards for? And we can all put our own internal hat on, and we can all say, well, we think we understand when we write a code of ethics, and I've got at least one member of the International Code of Ethics Board in this room and one technical advisor who sits and supports their member on that board in this room. Who are we writing the code of ethics for in the public interest? It's probably a broader group than just investor protection. And I think so it should be. So when you start to do these things internationally, or you start to talk about it outside the context of an individual set of auditing standards or an individual set of accounting standards, you've got to be very clear who it is that you're trying to protect or serve when you think about the public interest. And I would be delighted if somebody can give me a one-sentence definition of the public interest that fits globally, because if you think about public interest when looking at a city or state or federal government set of financial statements, what's the public interest there? How do you define the public interest? It's not investor protection. It may be as simple as saying every citizen, not every taxpayer, because every citizen doesn't necessarily pay taxes. So you see how complicated even coming up with a simple definition of public interest is, which challenges you if you think about what form of oversight you might be considering taking. So the monitoring group is challenged with monitoring the effectiveness of the IFAC reforms, monitoring the effectiveness by which the standards of these 4 standard-setting bodies that I am referring to are set. I'm going to really focus on audit and ethics today, but in fact we have education standards too, and Dr. Pincus is a former member of the Education Standards Board, and Dr. Ray Johnson, somewhere over there I saw earlier on, is a member of the consultative advisory group that advises that board. So NASBA has a strong representation, as does the AICPA. And Chuck, at this point, if you hadn't mentioned that you were going to be a board member starting January the 1st, I would say there's another evidence of the United States involvement with whichever hat or hats you're wearing. So if that's the monitoring group mission, then who serves on the Public Interest Oversight Board? Please don't ask me to explain the internal deliberations that the folks on the monitoring group had in deciding how many seats each would have on the oversight board. But the oversight board is 10 people, and you can see the numbers in brackets after each of these groups, which will tell you how many members the Basel Committee appoints to the PIOB. This has got nothing to do with IFAC. We have no control over who they appoint, or how long they appoint them for, or what backgrounds they come from. This is entirely external to the standard-setting process itself. But you can see that 4 of the 10 members come from appointments from the International Organization of Securities Commissions. So 4 of the 10 members, in our case, are thinking public interest with the definition of investor protection. That's not where the World Bank sees it. IFAC itself can nominate 1 person to serve on this group as long as they are retired from their sort of full-time day job, and we have, over the last 8 years, appointed 1 and then a second, nominated 1 and then a second retired major, big firm audit partner who had international audit experience. And so this group are the group that sit down and decide whether, in fact, the standard setting by the individual boards is working in the public interest. So I just put the chart up again. It doesn't make it any easier to understand, but we've got from the monitoring group to the oversight board. So the board's got really 2 functions. Apart from the oversight, it's got a great interest in who sits on the board. Who sits on these boards, the little green boxes at the bottom, that are the actual voting members who write the standards. And over the last 10 years, we have moved from 18 members coming from the profession, sitting in a room with no windows, just like this one, with no observers, and no cameras, and no recordings, and no public information about the agenda papers that they are looking at, to a group where the board still has 18 members, but not more than 9 can be practitioners. At least 3 have to be public members representing the broader public interest. So on our auditing standard setting board, we have auditors general from different countries around the world, the GAO office, if you like, representing a broader public interest. We have, as chairman of our ethics board, we have a non-accountant setting the ethical standards, a former Director General of the European Commission. Our auditing board is chaired by someone who was at one time a PricewaterhouseCoopers partner, but for the last 10 years of his other professional life, he was a central banker for the Netherlands and very high up in the central banking scenario. He is a CPA, but he hasn't practiced auditing for a long time. So the balance of the board is consciously intended to ensure that the debates around the room are not just 18 current audit partners from whatever size firms, and we certainly have on the boards, on the audit board in particular, we have people from the Big Four, we have people from the technical offices of the Big Four or the Big Six, we have people who are line partners in the Big Six, we have people who are from large regional firms, we have people who are from 2 or 3 partner single office firms. So we try and bring the right mix of people, and we try and make sure that they, and our problem is we have 129 countries to select from, not just one. So there are always people who, we have a problem that may be unique. We have more applicants to volunteer 600 hours a year of their time than we have spaces, which is not always the way. So we don't always keep going back to Billy Atkinson's and saying, now that you've done one job, we have another one, and then another one. We have a lot of people who want to do this, which is a very great benefit for us. But the challenge that we then got is that this Public Interest Oversight Board is very, very involved in the nominations process. They watch it with great degree of care and interest so that they can feel satisfied at the end of the day that not only are the people being selected appropriately, technically competent to participate in the debates and participate in the solutions, but that they represent the various different fields and interests and geographic spreads that we think are necessary in order to get a global solution. So we can't have 18 Americans, or even better, 18 Canadians, and nor can we have 18 Anglo-Saxons, and nor can we have 18 just from developed countries. Our challenge internationally is that we have a very diverse population that we can draw from, with countries like China, where they've got 200,000 people a year writing their CPA exams. They don't all pass, fortunately, but 200,000 a year writing their CPA exams. 1 million a year, 1 million people who are CPAs in industry or CFOs or in the preparer side of the community. So you have that at one end of the scale, and you've got huge numbers in many other countries. And then you've got the 10 or 12 institutes around the world that have been in existence and practicing their role as long as the AICPA has, who are incredibly experienced as institutes, as are their members. And any choice that you would have in terms of what might be an oversight system in a uniquely North American context will be substantively different from what might operate internationally, but I think it has some of the same elements. So right now, all of these board meetings are in the sunshine. All of the agenda papers are open to the public. Public can either listen in on webcasts or can attend the meeting in person. Now, if we held our meetings in Maui, we'd probably have to put more seats in the observer gallery, but assuring we have most of our meetings in the middle of Manhattan loses its interest after a while, and people who come once, they say, okay, seen that, done that, maybe I won't come a second time. I'm going to hand it back to you, Laurie. Thank you.
Thank you, Jim. Before I open the floor, are there additional comments from the other two panel members on this issue?
I have a few thoughts.
Please.
The Wheat Commission was formed in '72, AICPA inspired by the profession and by we the people. It produced the Financial Accounting Foundation, which is an independent body, yes, congressionally funded, if you will, partially congressionally funded, partially funded through the sale of the literature and that sort of thing. And its objective was to establish the FASB and the GASB as independent bodies to promulgate accounting standards here in the U.S. so that the public markets and indeed the public could rely upon the process and the resultant product. Over the last number of years, we've all lamented how that process broke. I've certainly said it many times. It was broken because of the absence of the input or the constructive and effective input of private company stakeholders and their needs, which is where we've gotten to today with private companies. I believe that before we merge our economy and our structure for promulgating accounting standards into the chart that Mr. Self just demonstrated, we owe it to ourselves to make sure that the FASB and the FAF don't work. I saw too many circles, bars, charts in that chart that concerned me from an effective control standpoint of we the people. And that's my concern. We have a very good process. It was born out of the right process, and it was indeed endowed with the right people at the get-go, but over time, it certainly decimated before us, and indeed on our watch. On our watch. We need to fix it, and we need to make sure that the fix is permanent and stable before we even believe that we need to merge with a global dysfunctional economy, which is just as dysfunctional as our government, and before we prove that through our inability to operate in that environment that we need to begin to invent additional standards of financial reporting that Chuck has talked about that will confuse the public and result in a fix that we may not want. We've seen it happen in other industries. We've seen it happen in other regulatory settings. And before we move into confusion, and let's remind ourselves, the public is today very easily confused. Before we move into that theater, we owe it to ourselves to support the process we have. We've got sovereignty issues as well that this body mentioned in 2009 in our letter to the SEC. And we've got to address it first and foremost before we consider these other alternatives. I know that IFRS is out there, and it's appropriate, as Russ mentioned today, that we give due consideration to the accounting standard setting process throughout the world because we are a global economy. Same thing with the auditing standards. These initiatives, these efforts are very real and very appropriate. But before we give up our sovereign right to comment on accounting standards locally as they're being promulgated, we need to think very carefully about the very process we have and whether or not it cannot be fixed. Thank you.
At this point, I'd like to open the microphones in the center aisle, open to the floor for any questions.
Thank you, Lori. My name is Coulter Baker. I'm from Texas, and I want to follow up on Chuck's commentary about the FRF SMEs. Your example is using the Atkinson Candy Company, and I love Donnell, Billy, I really do, but I don't think she should be setting standards that we would use in any presentation of accounting. And what she would do would be something optimistic, like a 12th man, always more optimistic than realistic, for accounting. My concern as a regulator, in all seriousness, is that, like Galen said earlier, like Russ Golden said earlier, users have to be able to determine comparable and understand comparable financial statements and have trust in them. As a regulator, I'm concerned that down the road, we're going to have problems with an untold number of financial presentation scenarios that we'll have a hard time pursuing bad actors on. So just a quick follow-up on that is, what do you see state boards needing to do to follow up and oversee this?
Thanks for the question. First of all, again, just my own personal view, I don't see that a lot of people are really going to start writing their own accounting standards. My point was more to the fact that it's hard to control how somebody prepares their own financial statements, and what one individual might find useful information to run his or her business, somebody else might not find useful or beneficial. And so that's why I like to think about what should the CPA's role be in reporting on that, regardless of whether it's a compilation review or an audit. There needs to be certain safeguards in place for the CPA to even be associated with those other kinds of special purpose frameworks. And if they do believe it's appropriate to be associated, then what are the safeguards within the reporting mechanism that need to be there so that we have assured ourselves as a profession that the special purpose framework is appropriate for general use, or the report on that. And that's where, from my perspective, what I try to think about. What are the characteristics of that special purpose framework that need to be in place before our auditing review or compilation standard would allow that auditor or that accountant's report to be general use? And I think it's through those kinds of characteristics and safeguards that then we can help protect the public. Now, to your point on comparability, if somebody switches back and forth between one method of accounting to another, that's going to be terribly confusing. Bankers also like to be able to pick up financial statements and compare industry, one entity to another. So I understand all of that, and certainly our role was not to add more confusion, although I understand how some might believe that introducing another special purpose framework might, but rather what we were trying to do was to react to what we were hearing across the country, that certain special purpose frameworks didn't work. GAAP was too expensive. And I don't disagree that GAAP's the gold standard. And any company who can afford and has the appropriate environment to use GAAP, by all means, they ought to be using GAAP. But on that lower end, we really saw a market need for something other than the two that are primarily used. And I can give you lots of examples of members who have come to me already and said, boy, this is really what our banker was looking for. This is really what our business owner needs. And so we'll see what happens over the long term. Hey, Billy mentioned it. If the PCC is able to come up with all the differences, it may very well make FRF obsolete. Fine with me. I don't think anybody at the AICPA is going to be disappointed because the PCC has come out with GAAP standards that essentially serves that same marketplace. I mean, that would be great. So again, I understand the concerns. I understand as a regulator how you want to make certain that your stakeholders in your state are protected. But again, and this is just my own personal view, I think we have to focus on what does the CPA say about the criteria and not worry so much about what the criteria might be.
I just add a couple of thoughts to what Chuck was saying. Sorry, can I add a couple of thoughts to what Chuck was saying? And I want to move out two issues I want to talk about. First, another accounting framework, sorry. And second, audit reporting. So on the other accounting framework, I totally agree with Chuck that there are people out there who are trying, without any of the history or competences that the groups that Chuck mentioned when he was going through the FASB, the GASB, the PCC have. There are others who are trying to set their own set of accounting rules for certain unique functions. I don't think they'll succeed either. They are out there looking for a niche, and they're trying to create that niche, and it'll be a short-term experience for them and for the world. But I do think that the niche that is out there, that is going to happen, is called integrated reporting. The AICPA is a very strong leader in this global initiative, because what everybody tells us is the actual financial statements are either so complicated that nobody can bother to read them or understand them, or actually they're not providing the information that people want, people being the broad range of stakeholders, the investors, the local community, the city ordinance authorities. What do they want? They want to know, if you look at McDonald's reports as a company, I just pick them, what's first and center on the front page of the inside cover after the chairman's message? We opened 252 new stores this year. That's big news. That's one of the things that people who are interested in that company are very interested in. We are more friendly. We reprocessed 86% of the garbage. We put these garbage bins in every one of our outlets, and now it splits between paper and cardboard and plastic. That's going to be the reporting of the future, and it's going to be integrated. It's going to be integrated into a point where there'll be a single financial report or a single report from a company which will combine all of this stuff. And the auditor will be challenged to report on all of this stuff. So this is going to mean that as the recipient of both the framework, whatever it ends up looking like and the reporting by the external auditor, we'll be looking at different models. And I do think that that's one, if you want to add one to your 11, Chuck, that you had, I think number 12 is going to be integrated reporting. My second point, though, is it really goes back to Jeanette Franzel's very, very quick but very effective report on the major PCAOB project on the auditor report. If this goes ahead as planned, and I have absolutely every confidence it will look very similar around the world to the way that she was reporting it to you this morning, you will never see a 3-paragraph audit opinion again. You will see long-form audit opinions. And you will see audit reports for companies in the same industry reporting quite different things in these sort of key audit matters that are going to be focusing the attention of the auditor. Now, what is that going to do? The challenge for everybody in this industry is going to be, how will those be received? So if you thought you had, let's take, it could be 2 car dealerships or 2 banks. Let's take 2 banks. And in this bank, the auditor reports that they looked very carefully at the interest rate used in valuation of financial instruments and financial instrument swaps. That was a key audit matter. And then there are a couple more that they talk about. And then the next bank doesn't mention that valuation or interest rates. Those auditors decided that wasn't one of the key 3 things that they felt that they needed to communicate. And I think we have a challenge then. Does that presume that the second bank where it was silent was okay? Or that the auditor never looked at it? Or that the auditor didn't think it was the most important thing in this particular bank, and so they reported 3 other things? And how will that be received by the general public? And my bet, and this is my personal bet, is that you as state boards of accountancies will have increased complaints about individual auditors or audit firms in retrospect. So how are you going to deal with all of those cases where this bank doesn't produce or perform as well going forward as this bank does, and some shareholder says it's the auditor's fault because they didn't identify the rate of interest that they'd used in their financial instrument swap calculations? And a lot of these things are going to be wrong. I mean, wrong in the sense that the complaint will be wrong, that in fact the audit firm did do the right stuff. But I think the challenge is going to be, what will be the timing of these complaints? Will it be 3 years later, maybe after the PCAOB's annual review of that year's financial statement audit files? Maybe they did pick that one, maybe they didn't pick that one. But I actually think that state regulators are going to have to wrestle with the fact that because the audit report is not just the on and off switch, but picks up on various issues, that we will hear more interested complaints or comments or questions from the broader group of stakeholders. And I'm not sure how that's going to be dealt with. The thing that Janet didn't say, and she didn't have time to say, is the real debate out there now is whether this will coalesce into more boilerplate. That after the first year, we'll see the same words around the same issues, maybe from different firms or maybe the same firm, or whether in fact we will continue to get different audit reports. Only time will tell. The 40-year-old practitioner in me says this is going to be an exercise that has a shelf life of 2 years, and then it will become more boilerplate paragraphs. But I hope I'm wrong. And certainly, I think some of the firms are seeing this as a competitive advantage model, that they can actually think about how can they best describe what they did to be helpful to the shareholders. It's going to be an interesting challenge, and I think it's an interesting thing for NASPA to be watching, because we don't know what the answer is yet because the standards aren't finalized. And so maybe I'm 3 years ahead of where you need to be, but please don't stop thinking about it because it's not going to be that far away.
Okay, one final comment, Billy?
Can you hear me now? There. That audit report, I don't know why, that just kind of stung me. That audit report, yes, will evolve into boilerplate very quickly, and before it is signed by a professional CPA who's a partner in that firm, it'll first be signed off by that firm's lawyers, which won't be cheap, and it'll be signed off by that firm's insurance company lawyers. And professionalism will die.
On that happy note, thank you, Billy.
I don't agree.
Give me a round of applause for our panelists.
And thank you so much, Lori, Chuck, Jim, and Billy. I don't. There'll be people that say it's just me, but I was in seventh heaven. I could listen to this stuff all day long. We appreciate your underscoring the strategic decisions these various bodies make, and about these issues and why they should be of interest to state boards, and that depend on the standard setters. And you've given us a lot to think about here today. If you have any additional questions, I'm sure that each one of the panelists would be happy to chat with you afterwards. But now it's time to relax with a raffle. And Tom Kenny and his staff are ready to present one of their great giveaway sessions. So here we go. And then we're going to have a showcase for the NASBA Center for the Public Trust set up in the foyer just outside the room. So come and sip some non-alcoholic Mai Tais, chat and see what this very worthy group is engaged in.